Hey, big world out there. How y'all doing today? Happy Saturday. Hey, it is Saturday, July 12th. Woo! 3 more days and we are halfway through July. Woo! This year has just came and left so quickly. So welcome to the show today. I'm glad you're joining me. How was y'all week? And look, life is life. I know I'm the very first person that'll tell you things will happen whether you plan for it or you don't plan for it. With that being said, you made it through another week. You may have had some highs. You may have had some lows, but that's okay. Be grateful that you are still here in the land of the living. Like, it doesn't get any better than that, okay? So, dust off your feet, stand up, scream, shout, kick, throw a brick, do whatever it is you have to do to relinquish what you're feeling, because you want to protect your energy and you want to protect your peace, okay? So, I am so happy to see y'all today. Y'all are in for a treat for another awesome show. But you all know I like to kick it off with fun facts. So I found this very, very, very intriguing. And it's a scientific fun fact. And did you know that clouds, like the clouds in the sky, weigh more than 1 million pounds? Like, honestly, when you look at it, it's like, how can this weigh more than 1 million pounds? That's a lot. And so I wanted to dig deeper into that and find out how. And clouds weigh tons because they are composed of countless tiny water droplets and ice crystals. And although individually these particles are small, their combined volumes result in a massive amount of weight. So I'm thinking that maybe I could just lay on top of a cloud because it weighs 1 million pounds. So I'm sure it could hold me and a whole bunch of other people I know. But I just found that intriguing that it weighs more than 1 million pounds. Like, I have a new level of respect for the clouds. Now, another fun fact. Did you all know that white is not an actual color, but the absence of all colors? So I had to do some research, because if you're not that color, but you're the absence of any other color, I need for this to make sense, right? So, white is, from a scientific perspective, is considered the sum of all colors within the visible light spectrum, rather than a single color. So when all colors are combined equally in equally proportions, the result is white. And that's amazing. Like, I just want to go get a whole bunch of colors and weigh them, the proportions, and just see if it'll turn white. So, I don't know, but I thought that was very interesting. So those are my 2 fun facts. Some may think it's corny, but I think it's informational, because you just never know. This may come up in conversation. Yes, we are still in the month of July. We are celebrating all July birthdays. So if you're celebrating a birthday in the month of July, if you're celebrating this weekend, be safe, have fun, enjoy. It is your day. You are able to do as you see fit within reason. I do want to give a special shout out to my barber and my best friend, Tommy Myers, aka Coach Tommy. He will be celebrating his birthday, his actual birthday, tomorrow. But if you know Tommy, he's probably going to be somewhere at a game or doing something. Like, he just can't sit still. But I love him for that. And we need more men out here for our youth, especially our young boys. They need mentorship, and that is an excellent role model. So happy birthday, Coach Tommy. You'll be hearing from me real soon. So last week I informed you all that time is flying. So The second quarter is already over with. We're in that third quarter. So if you have any payroll reports, which is forms 941s, you need to get those into the federal and the state entities. Make those payroll payments through the EFTPS system. Also, they have it now that you would have to have that sign in through ID Me. And once you sign in through ID Me, you're able to go in there and make those payroll deposits, those estimated tax payments, etc. Best to get on those payments. Now, also, please like, love, comment, share the content. We appreciate that. We like helping people and informing people. Also, you can go over to our YouTube page, type in Anointed Accounting, which is ANOINTED ACCOUNTING, and hit that subscribe button. All of our past shows are on there, and of course, every time we do a show, we upload it there so you can get all of this great information that Anointed Accounting is giving to you. So, wow, what an excellent show. Like, I have been so excited for the month of July because I just really love giving out information. And so throughout my time in preparing tax returns, I have learned so much. It's so much information that it's okay to give it away for free. It's okay to notify people of what's going to affect them, right? So how do you capture someone's attention? You talk about money. How do you capture someone's attention? You talk about how whatever they're doing is going to affect their financial situation. That's how you get people's attention. And also, I'll never ever forget Professor Yates. He was my accounting 101 and 102 teacher at Harold Washington College, and his name is Professor Yates. And again, he taught me, I'll never forget the first day of class back in 2011, and he said everything starts and ends with the transaction. He had my attention right there. Absolutely, he had my attention. So, what I'm going to talk about today is I noticed that when I prepare a tax return, I like to go over the entire tax return with that individual because I believe that you are supposed to know what sits on your tax return. You are supposed to see what's being submitted to any federal and state entity. Throughout my years of this, people have said, no, that's okay. You don't have to go over it. No, I give this to you because I don't know what I'm doing. No, this is not my lane, but I still go over it in a brief synopsis. What I found concerning is that the only time people ask those questions is when they did not get a refund, or if the refund was not as big as it was last year, and or they know someone who's received more money than them, but they make the same amount of money. Those are some questions that I hear more often than I should be hearing. And that leads me to believe that these people are not going over their tax return line by line. And why are they not going over their tax return line by line? Because they don't understand it line by line. And so where else better to get the understanding from than to come on over to Anointed and Appointed Accounting Services, Inc., where we can tell you what's on that tax return. So I am going to be talking to you today about your U.S. Form 1040, which is from the Department of the Treasury, Internal Revenue Service. And this is what that form looks like. This is your actual tax return, people. This is your tax return. This is what's submitted to the federal and state entities. Now, I did see that it was a glare, so I'm not going to hold it up there, but I am going to go through each one of these sections. And I am going to start with, let me see, is that better? Let me see. Oops, sorry. Okay, that's better. So I'm going to start here with section 1. This entire section right here. And what this section is that's your personal information. What do I mean by your personal information? That has all of your demographics, your name, your social security number, your current address, which means if the federal or state entities need to send you any form of correspondence, any form of communication, the last known address that they have on file is the address that they're going to send that information correspondence to. You can also update your address with the Internal Revenue Service if you have moved within that 12-month span and it's before the time of your filing, because you don't want to miss out on any information that they're giving you. So it has to match. So whatever the Social Security Administration has on file, that's what the Internal Revenue Service is going to be looking for when they receive your tax return. So it's important that that information is accurate. So you want to go over it and check to see if my name is spelled correctly. Is my middle initial correctly? Is my married name attached if I'm married? Is my social security number correct? Is my address correct? Do I have a unit or apartment number? Is that on there? Is my zip code correct? All of that information matters. It's so important. Very important. So now let's go to section 2, which is right here. And section 2 is your filing status. OMG. That is so big. You have to know your filing statuses. I remember briefly talking about this in February, and then I posed the question in May, do you know your filing status? And if so, what is your filing status and why is that your filing status? Just to see if people were aware of what sits on their tax return. So there are five filing statuses. And the first one is single. So what that means is December 31st of that tax year, you are unmarried. You are single. It is you. You don't have any dependents. You don't have any children. It is just you and yourself alone. Unfortunately, we cannot claim our pets unless our pets are for emotional support or support animals to help with anything that you're going through and is documented. So there's certain forms that have to be filled out for that. But being single means just that. You're single. Nothing and no one but yourself and your social is going on Form 1040. Now, your next status is married filing jointly. And what does that mean? If a taxpayer is married, they can file a joint tax return with their spouse. So, if you are married, you have the option, yes, to file married filing jointly. Here's where questions come in at. What if my spouse has a debt? You don't have to be responsible for the debt. There is a form that can be filled out that can be attached to your tax return that'll inform the federal government that, hey, I am in compliance, I am filing jointly. However, this is not my debt and I don't want to take over this debt. Now, will it take a longer time to get your refund if you are due a refund? Absolutely. But they're just double checking to make sure that all the information is split correctly and reported correctly. So it's like another set of eyes going over the preparer set of eyes. So that's what that means, to file jointly. Now, your third status is married filing separately. You can do that. You can actually file separately. The federal government allows that. So if someone tells you that you're unable to do so, that is not correct. When you file separately, that you get the same standard deduction, but you're just telling them, I'm in compliance, I'm opting not to file with my spouse. You're letting them know that. However, your spouse's information, their demographic information, part of it, which will be their name, their social, and their date of birth, has to sit on that tax return to let the IRS know, hey, I'm married, but I'm filing separately. This is my spouse's name, their information. Now, assuming your spouse has not filed, you want to let your spouse know, if you have not had this conversation, look, we are filing separately. You have to include my information on your return. If that information is not included, that tax return will get kicked back from the Internal Revenue Service because it's missing some information. So you can't get over, okay? Status filing number 4 is head of household. That is so important. Head of household means unmarried taxpayers may be able to file this status with special rules, meaning that you have paid more than half the cost of a qualifying dependent who stays with you. You've covered most of their expenses, so special rules will apply. Head of household also means you have a child. You provide all or more of 51% of their income. So they are allowed to sit on your tax return. We're going to get deeper into that, but I'm just telling you your filing statuses that sits on your tax return, because your filing status can also affect how your refund may or may not look, because it's different. Let's just say you're single and someone is married filing separately. You all may not get the same amount. Your standard deductions are different. So you cannot compare your tax situation with someone else's tax situation. Every tax situation is different. The last status that we have is qualifying widower with a dependent child. Now, this status may apply to a taxpayer if their spouse has passed away during the previous 2 years and they have a dependent child. So, assuming that you are married but you lost your spouse, after that 2-year period is up, you don't have to file as qualifying widower. You would then be considered one of the other filing statuses depending on what has changed. If you have not gotten married within those 2 years, then when you file, your status will be qualifying widower. Okay? So those statuses are very, very, very important. Now, we are going to talk about Section 3 of this wonderful tax return, which is digital assets. Now, what is digital assets? And they ask you on this return because they want to know if you have received a reward, if you have gotten an award, if you have sold or received payment for property of services. Did you excel, exchange, or dispose of any assets? And you're going to click that box whether it's yes or no, because you're informing them that I have an asset and I am including it on my tax return, because they want to know that your tax preparer and or accountant need to fill out and submit based on information that's on the tax return, okay? So, that's what section number 3 is. Now, this little bitty section here, and I done said it, standard deduction. Standard deduction. And we're going to talk about that because a lot of people get that section confused. You would either have a standard deduction or you would itemize. I'm going to talk about that more in depth a little bit later in this actual segment. I just want you to understand and see that standard deduction is right there. Next, we have this section right here called dependents. And everybody loved this section. As a matter of fact, I was having a conversation last night with a young lady, and it was actually 2 young ladies. And one of the young ladies said, oh my God, like, you have kids, so I know that your tax return looks nice. And the lady was like, yes, actually it does. But I only got about 15 grand last year. And the young lady she was speaking to said, well, I think you should have some more kids. First of all, people, listen, if you are having children just to get a credit on your tax return, you are having children for the wrong reasons. I don't think it is okay to wait for a once a year credit to have a child when you're going to spend more than that within that 12 months. That doesn't make any sense. Not at all. So if you're doing it just for the refund, please don't. Please consider that child. Please consider that that is also another human that's going to have feelings and emotions, and that is going to lean on you for that support. So yeah, let's just think about that and be mindful of what we're reporting and the reason why we're reporting it. But when we go to dependents, there are specific rules that apply when you want to file for your dependent. All this information I'm giving you is also on the IRS website. In that search tool, type in dependents. Type in other dependent. All of this information will come up. I guarantee you it will. But the rules apply, and this is general rules for dependents. The dependent must be a U.S. citizen, resident, alien, or national resident of Canada or Mexico. A person can be claimed as a dependent on your return, but they cannot be claimed as a dependent on someone else's return. So let's just say you have a dependent and you're claiming that dependent. Well, if you and that person's other parent are not together and are not filing together, that parent cannot claim them as a dependent and you're claiming them as a dependent. The federal government is only going to allow one person to claim that dependent. You cannot claim your spouse as a dependent if you are filing a joint tax return. So if your spouse sits on your return and you guys are married filing jointly, you cannot turn around and say, I'm going to claim my spouse as a dependent. Your return will get kicked back. A dependent must be a qualifying child or relative, and there are certain tests that have to be passed in order for you to see the credit and the benefit of this. Okay? Now, to have a qualifying child, you must pass all of those rules that I just talked about as having a dependent, along with more tests that you have to pass. So, you have to pass a relationship test, which means that qualifying child must be your son, your daughter, your stepchild, eligible foster child, brother, sister, half-sister, stepbrother, stepsister, adopted child. One of the above, they can be filed on your tax return. Hey, Auntie, happy birthday, sugar, sugar. Now, that's one of the additional tests that you must pass when claiming a qualifying child. Now, the age is 19 or 24 if they are a full-time student. So some people said, well, I take care of my child doesn't work, can I still claim them? Absolutely. If you can prove that you support them and you provide more than 51% of the support, they can sit on your return. They can definitely sit on your return if they are a student in school. At the end of the year, the parent, it's going to be in the student's name, will receive Form 1098-T, which is a tuition credit that you can get up to $500, $2,500. Yes, that's what it is, $2,500. So they can sit on your return, okay? That's important. Definitely important. Now, let's talk about the residency. they have to live with you for more than half the year. Some exceptions apply. Let's say they go to school. Well, of course, they're not living with you. They're on campus. However, you still can report that on your tax return. It has to be more than 51%, okay? Now, with the qualifying relative test, you have to pass all of those tests that I just spoke about and meet these general rules, which means they live with you. Their gross income is not more than $5,050, and they get all of their support from you. That's how you can claim that other relative that sits on your tax return. And again, when you sit down with, they can go over all of these rules with you, because there's a questionnaire that they're going to give you and ask those probing questions. So that would be able to help you. Now, I'm not saying you have to remember all of this, because that's not the goal. The goal is just to educate you so you can know what sits on your actual tax return. Now, here is the best part of the tax return that I like, which is this section right here that says income. And I'm going to go over this entire section right here with you, because this section is so important. So typically, what goes in box 1? Last week, I spoke about receiving a W-4. That is this form right here. So all of this information that we talked about last week, that's going to transfer over to that W-2, that information, along with your wages that you have received. So that's the income that goes in box 1. And it asks you for all of your W-2s. So whether you work one job or 42 jobs, all of that income is going to go on line 1. Tip income is something differently. It's reported differently. Mainly that's for all service industry, whether you're in the restaurant, bar, salon, whatever it is in that industry that you're doing, and there's something on box number 7, that's where some of that income is at in 7 and 8. Now, when we get down to boxes 2A through 6A, I get a lot of questions there. The first question I get, we're talking about IRAs. Yes, we are talking about your IRA distributions. And the questions that I get is, why is this taxable? Because some of this is taxable. Some of this is income, so it's going to be considered taxable. Now, you can take a distribution from your IRA, your SEP IRA, or your simple IRA at any time. There is nothing that states that you cannot go in there. You can. However, there is a however. Your distribution will be included in your taxable income, and you would be subject to a 10% additional tax if you're under 59 and a half. Shavonna, make that make sense to me. Okay, you have, let's say, a IRA, a 401k, and you need to pull money down and you're under 59 and a half. Are they going to tax you on that money when you initially get it? Yes, they are, at 20%. They're going to take 20% off the top. Now, when you file your income taxes at the beginning of the following year, you have an additional 10% tax that you have to pay on that money. So when you're looking at line 4A, and that's the amount of money that we're putting there, but 4B says what's taxable, that's the amount that's taxable. So some of that money is taxable, especially if you're under 59 and a half. The additional tax is 25% if you take the distribution from your simple IRA within the first 2 years. So you can take the money out. They're going to tax you on it in the beginning, but there's a 35% tax that's going to hit you at the end on your tax return. Now, some of the companies do tell you this when you're making that withdrawal. Some of them do not, because they expect you to already know. If you're going to be making withdrawals, you need to consult with your tax preparer or your accountant so they can let you know what you're up against. Maybe they can give you a calculation. I know what I do is I tax it, and I tell them the taxable amount that's additional that's going to be on there based off where we are within that year. But that's just something that I do. Everyone may or may not do that. It's at their discretion. Now, pensions and annuities. I get questions on this. Is it taxable? Fully taxable. Yes. The pensions and annuity payments that you receive are fully taxable. If you have no investment, which is your cost basis of that money. So if you don't have anything invested in that, that is going to be taxed. So when you look at your tax return and on 5A, you see the amount that's there, but on 5B, you see the taxable amount, because that's the amount of that pension and annuity that's able to be taxed. Now, here are some situations. If you didn't contribute to any after-tax amounts, you will have to pay a penalty on that, okay? And I was trying to find a light way to say it, but when you're paying back money, I don't think there is no light way to say it, so I just say it with a smile. Your employer did not withhold after-tax contributions from your salary, and you received all of your after-tax contributions, and it was tax-free in prior years. So that's something to think of. So when you have that 1099-R, somebody is going to ask you to submit form 5348, if I'm not mistaken, 5348 or 93. And that's just going to show them when this account was open, how much was put in, what was taken out, if any was taken out. So on our end, we can see what the taxable amount is, if any. We can see what your cost basis is. We can determine that to help you with your tax situation. So, yes, your pensions and annuities are fully taxable. Please don't think that they are not taxable, depending on how you put that money up and how it was set up. Okay? Now, I know it seems like I'm talking really fast, and this is a lot of information, and it is. So, that next line that I'm going to be talking about is on 6A, which is Social Security benefits. Now, here's the question that I get. I received Social Security. Why did you tax my Social Security? Wow. And I understand, because a lot of people, when receiving Social Security, do not have withholdings, nor do a lot of people have withholdings coming out of their pensions and annuities. However, that's not the case. Hey, Bonita! So, let's talk about your Social Security benefits. And the IRS, and it is on their website. If you type in Social Security benefits, it's in big, bold, black letters. The IRS reminds taxpayers that their Social Security is taxable. May be taxable depending on your filing status as well. Let's go through that. Let me tell you about that. So, some portions of your benefits are taxable. Again, depending on the amount of income you receive and depending on your filing status. Now, how this is determined is what's collected throughout the year. So they take all of your income that you receive, whether it's pensions, annuities, W-2s, 1099s, entrance, dividends, capital gains, whatever it is you have, because all that's income, and they combine that together. Now, if you are single and it's just you, and all of that income totals more than $25,000, a portion of your Social Security benefits will be taxed. If you are married, that you receive together is more than $32,000, part of your Social Security benefits may be taxable. That's important. Now, 50% of benefits may be taxable, and this is Social Security, if you are single, head of household, or a widower, and that $25,000 mark. So, Shavonna, can I go out and get a job? You sure can. They're not telling you that you cannot get a job. What they're telling you is that if you make more than $25,000, a portion of this Social Security is going to be taxed. So we have that 6A line and we have that 6B line. That 6A line is the amount of it. On 6B, that's what's going to tell you what's taxable. Now, up to 85% of your Social Security can be taxed. That's a huge amount, you say. Absolutely. And again, it just depends on the amount of income that you have coming in. If you're married filing jointly, and if you're single. Very important. Now, again, those same rules apply at now, instead of it being $32,000, it's taxed at 85% if you're filing single, head of household, qualifying widower, and your income is more than $34,000. They can tax your Social Security benefits at 85%. That's almost all of your Social Security, right? And I get it. So, here's the actual all around the world breakdown. Married filing jointly. If the income is more than $44,000, they're going to tax 85% of your income. If it's married filing separately and you live apart from your spouse and it's more than $34,000, they're going to tax 85% of your Social Security. If you're married filing separately and you live with your spouse, you are going to have to spend 85% of that income on your tax return. That's what you're paying taxes on. Now, a lot of people may not know that if you want to voluntarily withhold withholdings from your Social Security, you can do so. You can fill out form W4P. That will come. You can go to Social Security and download the form. You can request it. You can fill it out and just take it into your Social Security local office. And within the next 2 check cycles, you should see withholdings. Now, what I like to tell everyone is everybody's financial situation is different. I can only advise you as your accountant to have withholdings taken out because you won't be taxed at a higher rate of that 85%. However, Shavonna, understand that the struggle is real. If it comes to me taking care of my family and paying these taxes being withheld is going to have to wait because I need this at this moment in time. I get it. So with that being said, that's why they have estimated tax payments. You may don't have to want to wait till you file your taxes. You can go in and make estimated tax payments every quarter. Or let's just say you can't afford to do it every 90 days and you may want to do it every 4 months or every 6 months. Whatever is conducive to your pockets for you to try to stop that deficit at the end of the year is going to be so beneficial to you. That's important. Now, once you get all of these totals right here, they're going to start adding and subtracting, adding and subtracting, adding and subtracting. And this allows us to determine if there's going to be a potential refund. We're going to calculate your standard deduction, your itemized deduction. You can't have 2, it's either or, but I'm getting to that. And it's going to include some of the other schedules that people are unaware of. So, Shavonna, what do you mean other schedules? So, we have what we call Schedule 1. And that's for income and adjustments to your everything that you reported. So, if you have additional income, like if you receive unemployment, if you receive award money, if you receive prizes, any gambling winnings, all of that information is reported on your tax return, but that goes over to Schedule 1 because that's considered an adjustment to income. So that goes on Schedule 1. Now, Schedule 2 talks about additional taxes. Shavonna, we already paying taxes. What do you mean? Well, you have that self-employment tax. So if you file out on a Schedule C, that's where you get self-employment tax at. You have the additional taxes that I just talked to you about when it comes to your IRAs. Guess what? That's on there too. Retirement plans, your AMT payments, excess of your premium tax payments, which people pay for health insurance through the marketplace. All of that information goes on Schedule 2. And it's transferred over to your tax return. Now, let's go to Schedule 3. Schedule 3 is your additional credits and payments. So, if you have credits like foreign tax credit, education credits, general business credits, if you have any of that, that goes on Schedule 3 of your tax return. Now, all of this information that's on each one of those schedules will transfer, and it's going to be on one of those lines, and it'll tell you this is from Schedule 1, line 28. This is from Schedule 2, line 7. So that's why it's best to know what sits on your tax return. And I tell people this just so they can know what to look for, because if they look at something and it's a little different, then they need to know why. Now, let's assume that you no longer want to deal with the person that you've been dealing with because you've relocated, or they have relocated, or they have went out of business, or what have you. They're no longer in business. Because you're aware what sits on your tax return, when you sit down with that new person and go over your finances, you're able to understand the questions that they're asking because you're familiarized with your tax return and what should and should not be on there. Again, we're not trying to make you experts. I just want to make you aware. Being aware and being an expert is two totally different things. So now, I've mentioned standard deduction and I've mentioned itemized deduction several times. So now I'm going to get into it. There is a difference between the two. Now, let me tell you what the IRS says. A deduction reduces the amount of a taxpayer's income that's subject to tax, generally reducing the amount of tax individuals may have to pay. So, when we look at your tax return and we've calculated all of your income, when we get to line 9, all of that income is tallied up, and that's your total amount of income, right? So then when we get to line 11 and we remove any adjustments, now we're at your adjusted gross income. Now, line number 12 states, are they itemizing or is it a standard deduction? Typically, people itemize when you're paying real estate taxes, when you're paying mortgages, when you're paying out-of-pocket expenses for your health coverage, for your prescriptions. That's when people itemize, and I'm going to go further into that. But most taxpayers, you and I, may qualify for the standard deduction. That means that this is the standard amount that the IRS has allowed us to take to help with our taxable income that sits on our tax return. So, the brackets are, if you're single or married filing separately, your standard deduction is $14,600. So that means this amount is deducted from your total income And as we go down the line and we go over it, it'll say your total income, your adjustments. Now here is your standard deduction or your itemized deduction. That's taken away because, again, they're trying to help taxpayers. If you're married, filing jointly, and a qualifying widower, your standard deduction is $29,200. If you're head of household, it's $21,900. So they're trying to help you on the taxes that you're paying. You just have to know where you fit in at, meaning know your filing status. So you'll know what your standard deduction is. Now, that is a set amount that the Internal Revenue Service sets every year due to inflation. This is not a price and an amount that your accountants come up with. This is solely at the IRS. I wasn't invited to the round table when they made this. Hopefully I get there one day because I think it should be more than that. But that's just me personally. Now, here is something else. If you are 65 or older or blind, you can get up to an increase of $1,950 if you are unmarried, because you are a senior and you are blind. That is topic number 501. And there is a whole publication on that in the Internal Revenue Service library. It's public record. You can go to it and read it. Overall, the standard deduction helps the actual taxpayer. Now, we have itemized deductions. And typically, again, like I said, people itemize. Let's just say you give a lot away when you tithe and pay your offering. You may itemize. Now, the only way that you are allowed to itemize is if all of your itemized deductions outweigh your standard deduction, because you can't have both. So let's assume you pay those real estate taxes. Then you turn around and you pay a lump sum of money for prescriptions, doctor visits, labs, x-rays, hospital stays, and this is all out-of-pocket costs that you're paying, and you have that proof. Once you get that bottom line number, if that number is more than what your standard deduction is, they're going to give you the itemized deduction because that outweighs the standard deduction, and the more will help your bottom line number. It also gives you your contributions if you make contributions, and that could be to the Goodwill, Salvation Army, your church, anywhere you decide to give contributions. That's also going to be reported on your tax return. So it's very important that you know your statuses, again, because that plays a role. Now, as we get further down the form and we get to line number 13, and some of this has to do with our individuals who are on a Schedule C. It doesn't hit them personally. Well, guess what? It does hit you personally, because all that information that's on your Schedule C, regardless to if you have an EIN number or not, that profit or loss transfers over to the front of the form. That's where you're going to get your taxes, and your tax amount is going to be on the back of that. But we're going to talk about that in part 2 of next week. However, you get what they call a QBI, which is a qualified business income deduction. Now, the purpose of this form is on form 8995. Thank you, Auntie. I be trying to give out information. Miss Vivian. So I guess I'll be paying taxes. You know what, Miss Vivian? All of us going to be paying taxes the rest of our lives. All of us. Now, I've talked about estimated tax payments, and there's ways that you can help your situation depending on where you are. So I would love to have a conversation with you. So give my office a call, 312-837-7219, and we will set you up with a consultation so we can help you. We do not want you paying taxes all of your life and being sad like that. Now, I'm sorry. Now, back to this form. You want to figure out what your QBI is. And typically, individuals that have trust and estate accounts, they get a 20% deduction because this information also transfers over to Form 1040. Now, income coming from a pass-through entity, a C Corp, and your retirement income investments, that's an additional 20%. So you want to be mindful when you're looking at this deduction and how it's going to benefit you. Again, this mostly comes, again, for people who have trust and estate accounts and that file out on Form Schedule C. Please do not have the misconception that because you are reporting the name of the business and the EIN number that this does not come over to you personally. Well, it does, because again, this information is transferred to the front of your tax form. And that line that says on additional income on line 8, that's where that is going to come from. Okay? Them capital gains, people sell stock. Oh, we don't have to pay taxes on that. Absolutely incorrect. You do. That's also going to transfer from Schedule D over to the front of your form. You're going to have to pay taxes on that. So you have to be mindful. That's why it's best to have a good communication relationship with your accountant and or tax preparer so you can know what you're getting yourself into. I like to use the word nosy because we are in your business. We have to be nosy because we want to help you. We don't want to wait till the end of the year to try to help your tax situation when a conversation could have been had throughout the years that can help your tax situation throughout the year that we're in. We don't want you to always have a deficit. That's not the purpose of it. It's not. It's really not. And it also depends on your tax bracket. That plays a major role in it. Again, going back to those forms that I talked about last week, that form W-4, this plays a role in your tax situation. If you do not turn that in, if you are trying to claim more dependents than what you already have, guess what? You've gotten your refund throughout the entire year. You're not going to get it both ways. It's not going to come to you throughout the year and at the end of the year. Unfortunately, the federal government doesn't see it that way. In a perfect world, would we like that? Absolutely we would. But unfortunately, it just doesn't happen like that. So you have to make sure that you're filling out those documents correctly when you're submitting them to your employer. Because again, here's that domino effect, because here come those paychecks. Then after those paychecks, when the year is up, you now have your W-2. Now you get the W-2. That information is submitted to someone like myself, and we're going to start preparing a tax return for you. And if it does not look how it looked last year or like your friend's tax return, then there is going to be those questions. Why? I can tell you now, the person's tax return that you looked at has a different financial situation than you. I don't care if you make the same thing. You don't know what they put on their W-4. They don't know what you put on yours. Now, could you have showed each other your W-4s? Absolutely. But if you're not aware of what you're looking at and reading, it does not mean anything at all. Everyone's tax situation is different. Suppose, let's use myself. Suppose I work with someone and we both make $25,000 a year. We're both single, no dependents. However, this person got a $500 refund and I owe $500. Why is that? Neither one of us have any kids. Well, guess what? They had single and 0, whereas I had single and 1. So I got all my money throughout the year. So the tax situation is different. If you received a refund last year and your refund was $10,000, but this year was $5,000, that means something happened with your income. Let's say you got another job. You didn't check that box C, on that W-4 to let them know that there's another source of income to withhold, that the amount that they're supposed to withhold, then you may have a deficit at the end of the year. Again, you're not going to get all of this throughout the year and then turn around and get it on the back end of the year. Unfortunately, it's not set up like that. Now, a lot of people run to get LLCs. I commend you for that. I'm not against having an LLC. However, if you are going to have an LLC and it is going to be attached to your Form 1040, you need to make sure you keep all of your income and expenses. If you're not doing bookkeeping services, if you don't have an Excel spreadsheet, do like 84% of my clients. They bring me garbage bags of receipts, and I have to go through those everything. I don't mind that, because I'd rather you bring me more information than not enough information. This will help you throughout the year when you're in your business and you're making a change. You must consult with your accountant or tax preparer, because they are going to be able to help you. Again, it's us being nosy, and we're being nosy because we want to make sure that we're helping you. We don't want you to always be sad at the end of the year because you owe taxes. No, filing taxes is supposed to be exciting. And here is something else that I will tell people that have their business connected to them, and they're on that Schedule C, and they owe. Guess what? You're paying into your Social Security and Medicare. Why? Because no one else is paying into it for you. You are a sole proprietor. You are making this money all by yourself. No one is matching those fringe benefits for you, which is your Social Security, FICA, and Medicare. No one is matching that for you. So you are paying that. So whereas it may look good to receive a $5,000 refund, I'd rather pay $5,000 because I'm paying into my Social Security and my Medicare. So when I retire, this is what I will have. This is the money that I have saved and that I have put up, because it goes towards me. So when you look at paying taxes, don't look at it as a negative. And I understand why people look at it as a negative, because a lot of people do not go over their tax return in its entirety. It's very important. So today I covered sections 1 through 5 with you, which is your demographics, which is your filing status, your digital asset portion, your standard deduction, your dependents, and your income. I also made you aware what can be taxable when it comes to pensions and annuities, Social Securities, IRAs. It's so important to know this information. And guess what? If you forget it 100 times, you make that phone call 100 times. You send that email 100 times. You send that text message 100 times. If your accountant or if your tax preparer is sad or upset with you because you continuously reach out to them for information, you need to let them go. Kenny, oh my God, it is so good to see you. That's another one of these excellent accountants, tax preparers. So it is very important that you do that, okay? So I know we covered a lot of information today. You guys have any questions or concerns? You already know my contact information is www.anointingaccounting.com. I am on all social media platforms under Anointed Accounting. My telephone number is area code 312-837-7219. I look forward to seeing you all next Saturday. You all have a good week. Y'all know my motto. We start on time. We definitely end on time. Have a great week, and I will be back to talk to you more about your Form 1040 Lord's will next week. I love y'all.